Hey everyone, how you doing? Hope you're having a great day and absolutely smashing it. Today I want to take a quick look at gold and to do some very basic technical analysis and get a feel for where the price is going to go potentially over the next week or so. Gold typically is seen as a safe haven, as a hedge against inflation. So when stocks or economies aren't doing quite so well, people put the money into gold as a more secure investment. But what we've seen recently with the huge bull run in the US stock markets, especially the S&P 500, price of the gold has started to falter. So the 1 year price increase from gold is still around the 16% mark, and if we compare that to the S&P 500, that's still showing pretty much on the year a 13% increase. What's interesting though is that gold for the past 3 months is showing a 4% decrease, whereas the 3 month increase with the S&P 500 is around about 8%. That could be because obviously it was affected massively by the COVID dip in March, and it's rallied significantly from then. What will be interesting is when President Joe Biden comes in this week, he's going to be reversing a lot of policies that Trump's introduced over the last 4 years, as well as potentially tighter restrictions on COVID, and that may see a harmful detriment to the stock markets and could see gold surging again. On this chart here, we're looking at the weekly view on gold, and as we can see, it's been fairly consistently uptrending since early 2019. The price has moved up, it consolidates a little bit and then rallies again. We were starting to see a flag pattern here forming from the high of last year of price around about 2075, consolidating down, and it did break out here, but it's been fully rejected. If we look at that on the daily chart, it's a bit clearer to see. What we'd expect to say in a normal flag situation is this being the pole, which was the run-up, consolidation with price coming in a downward pattern, and then price breaking out through that channel and forming the same bar going upwards. Unfortunately, this was rejected and prices come down. What's interesting is the inverse correlation between gold and the dollar. Typically, as the dollar strengthens, gold weakens and vice versa. So if we do an overlay here between the dollar and gold, so with this overlay we can see the recent high, price coming down almost in the same region as the dollar. As the dollar now starts to tick up, price has been significantly falling over this past couple of weeks. That might just be a coincidence, or it may be that there's a new correlation forming, and as the dollar increases, the price of gold will continue to decrease. As a trader, I'm not too worried about the massive long-term significant effects on price on gold. I'm more worried about the 1 to 2 week patterns forming on the 1 hour and the 15-minute chart. What is interesting is that recently the price has now fallen between the 50 and the 200 moving average. There's some real indecision here, so there's not showing a clear trend on the daily chart. So here on the 4-hour chart, we can see the price is really starting to become range bound between around about 1820 and 1860, and that's been consistent for the past week. If we look a bit further back in time, we can see this 1820 level was also quite strong towards the end of December, when price was starting to trend up again on the 4-hour chart. As we can see here, from where it reached the high of the 1960, it's broken down, consolidated, broken down again. We're now consolidating. If that continues, we expect price to break through this 1820 mark and come all the way back down to this level in the channel, which could be around about the $1,700 mark. The picture is pretty much the same on the 1-hour chart. As we can see here, price came down, consolidated, broke, consolidated, expecting it to break. Here we can see price trending down below moving averages, showing that we are looking for short selling in the upcoming week. So you can see here on this 15-minute chart for the last week, when the price opened up in the Asian session, there's a big sell-off down to 1820, and it's been going sideways ever since. Quite a tricky market to trade because there is no clear direction in this particular one, although we are looking for majority of our trades to be short, confirmed by the 1-hour and the 4-hour chart with price moving downwards. So back onto the 4-hour chart, if this is to play out as a continuation pattern with a flag, here we've drawn in the pole. If we move that over to where we're likely to see the break, therefore we can see price coming back down to the $1,700 mark, which would be consistent with this channel line coming down. So my expectation for the week is more uncertainty on gold, with some more selling pressure, with a break of the 1820. Maybe we reach 1720 by the end of the week, but I think it's going to be very unlikely. But it's definitely going to be a good, interesting one to watch. If this has been useful, comment below on what other markets you'd like me to do a quick analysis of. Catch you later.